Hello and welcome to the 7 Profit Generator section of Bootcamp 2.0. Over the course of this section, we're going to talk about each of the various components that you can use to generate substantial profits throughout the markets in the different favorable and unfavorable conditions. So before we start, let's talk about the concept around how do you generate consistent profits. There's a basic framework and formula that each and every trader can focus on using to generate cash in the markets. By cash, we mean the following: knowledge, attitude, skills, and habits. This trading paradigm puts you in the best position to be able to leverage your understanding of the various aspects of how to succeed in terms of generating consistent profits. So let's go into a little bit of depth and detail in regards to the knowledge formula. Starting out, we want to focus on the specific information, materials, and conditions that are essential for your trading survival. This really consists of charts as well as a good understanding of technical analysis. So once we have a good understanding of a knowledge base that allows us to apply the different chart techniques, tools, tactics, patterns, coupling that with the appropriate technical analysis, it puts us in a position to be able to leverage the next component. The next component is the appropriate and correct attitude. Now, by specific demeanor, we're really wanting to understand what's required to have an unbiased and an objective perspective about the markets. So this is where traders have to rely on an appropriate mindset and trading psychology in order to be able to establish the right trading survival conditions and tactics. You couple the knowledge and attitude with the appropriate skill set. This allows you to have an unlimited number of ways to generate the appropriate profits to meet your daily, weekly, monthly targets for your trading style and your respective trading plan, such that you are in a position to leverage the appropriate strategies that will help obviously meet those targets, but also to be able to have the appropriate risk and money management tools so that you can be able to sustain, maintain your trading capital, as well as preserve and protect your trading profits. But ultimately, the most important aspect in each and every successful, consistent, profitable trader's arsenal is the ability to do the following, and that is to be flexible, self-disciplined, and have the ability to create repeatable events such that they can focus exclusively on allowing them to be able to manifest successful trading. This is what's establishing your trading profits such that they're consistent and allowing you ultimately to change your lifestyle. Now, traders typically will go down a path of starting to devise a trading approach, or they will devise a trading game plan that is sometimes often sporadic. We want to take this approach of knowledge, attitude, skills, and habits and start to look at it in a very linear manner so that you're in a position to learn how to leverage your charts with the appropriate technical analysis, then combining that as we develop over time the right mindset, the right attitude relevant to the markets so that we're looking for realistic expectations, very respectable profit targets. We're able to preserve, protect our trading capital as I alluded to earlier. But more importantly, as we continue to develop and build an arsenal of strategies, risk and money management tactics, this allows us to establish the most solidified habits that you will need in order to generate the profits in the lifestyle that you're pursuing. So now, let's talk about, in the context of trading, the 7 profit-generating opportunities that allow you to be able to take advantage of the various price action movements. Now, let's focus on that there are 7 unique price action movements, and we're going to go through each and every one of these and provide you with a very clear understanding of what's required for you to be able to leverage them in the context of your trading. So first, there's clearly the uptrend where we will experience some form of price action movement in a higher highs, higher lows manner that allows us to see price action continuing to basically exhibit an upward movement. Very similar Scenario 2, or the second profit generating opportunity that we want to focus on, is clearly the downtrend. And in the downtrend, we're going to be focusing on lower highs, lower lows, as well as other characteristics that help us to truly understand price action's momentum, descending or declining. The third most important aspect of price action movement that allows us to be able to take advantage of profit generating price action movement is the sideways price action. Now, this is where you have an upper and lower boundary of support and resistance respectively that allows you to be able to see sideways consolidation, congestion, or range bound price action. These three unique price action movements predominantly define the entire markets in the context of the three scenarios that each and every market presents. We want to learn to expand these three movements beyond so that we're able to identify additional trading opportunities. So we're going to expand the uptrend to incorporate an uptrend breakdown, which is the profit generating opportunity number 4. And then we're going to be expanding the downtrend with a breakout opportunity so that we can start to look for opportunities of momentum shifts and reversals similar to what we see obviously in the expansion of the uptrend. And then last but not least, we're going to expand the sideways price action so that there are two additional price action movements that we can extensively focus on for profit opportunities, and that being the breakout of sideways consolidation as well as the breakdown. Now, when you combine these 7 unique profit generating opportunities, it puts you in the position to be very, very clear on how to define trading tactics for each of them that allow you to master your ability to generate profits. The two most, that is, unique aspects of trading the markets for the most success will naturally come from uptrends and downtrends. Now, let's talk about uptrends. In the context of an uptrend from the trading everyday approach, we want to focus on the clear definition of higher lows, higher highs, higher openings over the course of multiple days, as well as price action will be eventually defining additional characteristics over multiple days to help with solidifying the definition of an uptrend. In the course of an uptrend, there's going to be natural retracements or pullbacks. We're going to define these natural retracements or pullbacks based on a simple retracement level of 38%, 50%, all the way up to potentially 62%. Now, in the context of an uptrend, these 3 natural retracements, there are 3 variations that we want to focus on. The first variation we're going to define in the context of a flag pattern. The second one is going to be clearly defined in terms of wedges, broadening patterns, and then the third in the context of a triangle. So let's start with the first one in the context of clearly defining what we mean by an uptrend and the natural retracement. There is the possibility of price action moving from the point A to B, and we clearly want to define that as leg 1, and then we'll experience some level of a natural retracement in price action. That natural retracement, as you can see, is going to be defined by the leg from B to C, or leg 2, and then there's usually the continuation of the original move in the direction of momentum, which is defined by leg 3. This natural retracement that I want to kind of highlight here is what we're talking about in the context of a 38 to 52% pullback in regards to the uptrend. And you'll notice that this is where we're seeing parallel upper and lower boundary of support and resistance in price action from the leg B to leg C. Now, the second variation is where we see a divergence in price action in the natural pullback. It's still going to give us a good indication and gauge of 38 to 50 to 62%, but just as importantly, we're seeing that price action, obviously, instead of being in a parallel upper and lower boundary of support and resistance, is in an upper and lower boundary of support and resistance that's diverging away from each other. This again allows us to be able to look at the variation of how we're going to trade these in a very unique but yet similar fashion. The third variation, very similar to the first two, is where we're clearly looking for converging price action, and you'll notice that these three unique variations are the only unique mathematical possibilities of price action: parallel, converging, as well as diverging price action. And so when we start to see these unique opportunities, we can clearly see that all three of them, if we use the same framework, same tactics and conditions, we can trade them very similar in the context of an uptrend. So irregardless whether we're in a flag pattern with a natural retracement from B to C, or whether we're in a wedge or broadening pattern with a natural retracement that is from E to F, or whether we are in a triangle of some kind in terms of price action where we have a retracement from H to I, we're going to use very similar tactics by focusing on the natural pullback between 38 and 62% and allowing that to help us define the uptrend and a continuation of the uptrend, but also allowing us to learn how to trade that accordingly. Now, the downtrend, as you can imagine, is going to be very similar to what we just defined for the uptrend. We want to focus clearly on lower highs, lower lows, lower openings over the course of multiple days in terms of price action, and then we're going to see some form of a rally off of the lows there before continuation of price action in the dominant direction. So very similar to what we defined in the profit generating opportunity number one, which was the uptrend. We clearly see parallel price action, and we're going to see the opportunity for price action to bounce off those lows, and again a nice retracement or rally off those lows of about 38 to 62%. The same thing can be said obviously for when we have diverging price action in a downtrend, when we bounce off the lows there in terms of leg 2, and again natural retracement off the lows for 38 to 62%, and then the last scenario or variation there being converging price action, where again we're doing the exact same thing and looking at that bounce off the lows. We're using these very similar conditions of price action in terms of leg 2 for flags, broadening patterns, or triangles to be able to help define the downtrend definition, but more importantly, it solidifies the continuation of price action from a momentum perspective. And this is where we want to learn to be able to trade each and every variation of the price action movement in regards to an uptrend or a downtrend respectively, with flag patterns, broadening patterns, or
Get more free videos and examples at www.tradingeveryday.info.